Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Qingyi Wanan. Today is Tuesday, January 20th. I'm analyst Zhang Jida. During class, please remember to like, subscribe, and share for us. If you have any investment questions, feel free to leave me a comment. If I don't have time to answer today, I'll make sure to respond to everyone in tomorrow's class. Hello again everyone, we're quickly moving into January 20th. Yesterday was Monday, and it just so happened that it was Martin Luther King Jr. Day in the United States, so there was a day off. That's why our Global Wanan program is only starting its live broadcast today. Time really flies. It's already January 20th. Just think, a whole month goes by so quickly. From New Year's Day on January 1st, 2026 until now, it's only been 20 days, and this month is almost over. I wonder if everyone has made good use of the so-called January market trend. After the January trend, what's next? It's the entire first quarter. So what about the market in the first quarter? January, February, March, can this whole bullish momentum, this bullish trend continue all the way through the end of quarter one? It's still something worth paying attention to and discussing. So what's the reason for this discussion? Of course, we'll break it all down for you one by one in tonight's show. All right, everyone, welcome. Let me take a look at who's online right now. Hui Xuan, good evening. And also good night to Mei Daizi. Then there's Yulunga, flying in the universe. Good evening. Also, hi to Aya and Ludan. Ludan, I did answer your question, but I'm not sure if you saw my reply. And then there's Miss Cher, and who else is this? Good evening to you as well. Melissa, good evening. All right, okay. Let me first answer the question from Ludan just now. Seeing Ludan makes me a bit hungry at night. He asked whether the new Taiwan dollar will depreciate or appreciate against the US dollar in the second half of the year, and whether he should continue with the US dollar time deposit at a 3.5% interest rate, and so on. All right, let me briefly explain. Because our Good Night program is public, when we do analysis, there are certain regulations we have to follow. We're not allowed to analyze whether the new Taiwan dollar will appreciate or depreciate. This is a legal requirement. If we were to analyze it, we could get into a lot of trouble, and it would be a big hassle for us. So I can only explain it to everyone in a different way. When it comes to the appreciation or depreciation of the new Taiwan dollar, you'll have to look at it from another perspective. What I can say is that according to the Federal Reserve's monetary policy, it looks like there's room for 1 or 2 rate cuts this year. Plus, Trump is more supportive of rate cuts and favors a looser monetary policy. In May of this year, he will also replace the Federal Reserve chairman, so Powell will be stepping down. So, following this logic, US monetary policy will tend to favor depreciation. Generally speaking, when monetary policy leans toward depreciation, it also leads the US dollar to trend downward, making the dollar relatively weaker. Just think about it. Basically, the US dollar and non-US currencies work like a seesaw. If the dollar is on the weaker side, then usually non-US currencies will tend to appreciate. Of course, there are many other factors as well. For example, whether Japan raises interest rates or whether the Eurozone cuts rates will also affect the movement of the dollar in the exchange process, leading to different trends. We're just giving everyone a simple overview here, saying that if you have bought those so-called US dollar time deposit products, I think a 3.5% deposit return rate is actually pretty good. Compared to Taiwan's time deposit rates, which are about 1.5% or 1.6%, I think a 3.5% US dollar time deposit is quite decent. It's just that you should try to invest in it for the long term. All right, because after all, maybe when you convert it back to new Taiwan dollars, there will be some exchange rate differences, but overall, I think a 3.5% interest rate on the time deposit, if you invest in it for the long term, can still be considered as one of your investment options. So you can keep a portion in this US dollar time deposit and keep another portion for diversified investments in Taiwan stocks or US stocks. I think this kind of asset allocation and portfolio strategy is a better approach. So this is just a reference for Ludan. All right, good evening to Master A and also to Alvin Chun. Good evening, hello tonight. And who is this? This name is a bit long, something permanent. Is this a new friend? Good evening, Huang. Okay, all right, I see you saying hi. That's great. Okay, now I know who you are. All right, good evening to the staff as well. And Rock Up Rocker, Rocker Paul, is that 0916? Good evening. This student M is pretty interesting. He said that last Friday because we didn't have a live stream last week, I happened to go to a class at the Guild. We have to take those on-the-job training courses every year or every 3 years. So I was in class and it just so happened that one of our classmates was sitting next to me. Our classmate it was actually one of our online classmates and they greeted us. So this person said, wow, the world is really small. Basically, when you're in class, you can't really get away with doing anything bad. Luckily, that day I wasn't dressed too casually, and I didn't doze off either. So it was a good thing that this classmate recognized me as the lecturer for the Kunming Good Evening session. Anyway, everyone is welcome here. No matter what investment questions you have, feel free to leave a comment. And remember to like, subscribe, and share. Take some time to look back at the previous content too. Oh, by the way, someone asked if they can ask about individual stocks? Yes, you can. If you have opinions or questions about any US stocks, you can leave your comments here. As long as time allows, I'll respond to everyone today. If I don't get to your question in time, I'll answer it one by one in class tomorrow. So basically, just go ahead and ask your questions, whether it's about individual stocks, industries, or even macroeconomics and so on. As long as it's something I know, I'll share everything I can with you, holding nothing back. Now let's take a look at today's investment highlights. First, this week, let's preview some major data releases. Even though there are only 4 trading days, there are still a lot of important data points coming up, which I'll walk you through in a bit. Also, why did the US stock market futures suddenly experience a sharp drop today? Actually, this big drop has continued from Monday and Tuesday. It's been going down for 2 days straight. Why is the downward pressure so strong? Of course, it's related to someone. It's connected to Trump. So this Emperor Trump, what kind of person is he? He always likes to make his presence felt. Just a couple of days ago, last week, we saw him say that if countries with control over Greenland don't support selling or giving Greenland to the US, I'm not even sure if it's giving or selling. If they don't support selling it to the US, then he'll impose tariffs of 10% to 25%. I'll add a bit more about this for everyone later today. Aside from that, today Trump brought up something new, a so-called Peace Committee, which is related to his own idea of establishing a United Nations. This move will introduce a lot of new geopolitical uncertainties and could even reignite the flames of the trade war, causing everything to heat up again. This escalation could lead to significant volatility in the stock market and the economy as a whole, especially since both the US stock market and international markets are currently at historic highs. So even the slightest disturbance, or just a few words from Trump, can easily cause huge market fluctuations. That's why everyone needs to be especially careful when it comes to managing your positions and holdings. So what exactly is the kind of United Nations that Trump wants to build? And why does it cause such big market swings? Let me explain it clearly to everyone. Alright, now regarding the industry side of things, among the tech giants, what about Apple? According to the research firm Colorpoint, Apple has regained its leading position in market share in mainland China. So what kind of positive news has come out, and can this good news actually help? Apple's stock price has bounced back up again. We can see that recently the companies invested in by the Magnificent Seven have been relatively weak, especially Apple and Microsoft. They've both been underperforming, and there are reasons for that. So can Apple really hold on to its leading position? We'll explain that clearly for everyone today. In addition, this is also related to AI leadership and OpenAI's new products. What kind of new product is OpenAI about to launch? This launch could potentially impact Samsung's phones and even Apple's related products. So what exactly is this product? That's why you really need to pay special attention to OpenAI's new release. Alright, so of course, in addition to supplementing all this for our investor family today, let's talk about economic data. Tonight, things are actually pretty calm. There aren't any major US economic data releases this evening. But this morning, China announced its 1-year and 5-year loan prime rates for January. Just to give you a quick overview, the 1-year and 5-year rates are holding steady at around 3% to 3.5%, with no significant changes. But you might ask, will the Chinese government introduce even more rate cuts or reserve requirement reductions to stimulate the Hong Kong or mainland stock markets? I think they probably will. I remember last week, the governor of their central bank specifically mentioned something about holding meetings. I'm not sure if it was at the prefecture level or some kind of plenary session or what kind of meeting it was. Honestly, I'm not sure what it was exactly. Anyway, in a lot of those parliamentary meetings, even the central bank governor specifically said that China still has room to cut interest rates and lower the reserve requirement ratio. So it's reasonable to infer that even though right now China's 1-year and 5-year loan rates are holding steady at 3% and 3.5%, but I think there's still a chance for a rate cut later this year to support the continued rise of the mainland stock market. Just wanted to add that for everyone. Okay, good evening, Ziheng. Wow, silver has been strong for 96 weeks. That's impressive. Good evening to SY Liu as well. Good night to you too. Focus on statements from officials and investment institutions alongside economic data. In conclusion, with Taiwan and international stock markets at historical highs, you might ask if there are economic issues. Currently, there are none. The economy is doing well too. Let me give you the conclusion first. Since the economy is generally good, including, as you can see, last week, both the World Bank and today the IMF, International Monetary Fund, released their forecast for global GDP, as well as for the US, the Eurozone, and China. The outlook is still generally positive. The current issue isn't whether the economy is heading into a recession. It isn't. The economy hasn't gone into recession, nor is it heading for a hard landing. Okay, the only drawback right now is that the stock market has risen too much. The market is in a relatively high plateau. So at these historic highs, there are a lot of concerns about overvaluation. And even technical and market sentiment factors could lead to a pullback or correction after such a big run-up. This is a bit tricky because when something has gone up too much, whether it's like our classmate just mentioned, silver rising to 95, right? Whether it's silver, gold, the stock market, an index, or an individual stock, as long as it gets overbought, it naturally becomes a significant risk factor in itself. But that risk factor isn't necessarily due to fundamental issues. It's simply a matter of technical and market sentiment corrections. Right now, during this short-term January peak, especially toward the end of January, it's easier to encounter these kinds of situations, so everyone should pay a bit more attention. So why do I say there aren't major problems with the fundamentals? Take a look at this info menu. Good night, by the way. As for this INF, it says that the estimated global GDP for 2026 is 3.3%. In fact, that's even higher than last year's estimate of 3.1%, an increase of 0.2 percentage points. And for next year, 2027, which is still quite a ways off, more than a year from now, they're forecasting 3.2%, which is the same as the previous expected value. What they said is that the economy is showing resilience right now, but it's facing risks from trade and uncertainties from geopolitical factors. So we need to pay a bit of attention to these two things, trade wars and geopolitical risks. It's true, last year was the same way. The trade war was raging all year, from February, March, and April, with global tariffs being imposed, all the way until late October or November, when the US finally told China we decided to call a truce and pause the conflict for a year. This year, after November 2022, we'll talk about it again. So, about last year's trade war, will it continue this year? To some extent, yes, but we think the intensity will decrease. Let me say it again. Will there be a trade war this year? Yes, there will still be some fluctuations, but the intensity of the conflict will be lower. It probably won't be as intense as last year, because after all, this year happens to be the 2026 US midterm election year. So in an election year, of course, whether it's the Republicans, Democrats, or officials from other countries, everyone will try to roll out attractive economic policies to support the stock market and the economy. So generally, they won't do things that make people's lives miserable for no reason. For example, they won't suddenly let inflation spike, or let the economy decline, or have the Federal Reserve refuse to cut interest rates for no reason. Those kinds of things usually won't happen. Why? Because it's an election year. And then he also mentioned that AI is a driving force for growth, and indeed, this momentum will continue this year. It's expected that even through 2027, with the ongoing boost from AI, all industries will still benefit and be supported by the AI trend. It's just that today, maybe it's a different sector that's moving. Tomorrow, it might be GPUs going up, and the day after, maybe it's DRAM stocks rising. This kind of sector rotation will happen, so everyone should pay a bit of attention to that. Also, of course, he mentioned a lot of things like the bada economy, economic entities at 1.8, emerging markets at 4%, and so on. He even said that this year, the US GDP is expected to be 2.4%, next year 2%, and then there are figures for China, the Eurozone, and so on. Honestly, if you just take a quick look at these numbers, they're all showing growth. There isn't a single country that's really leaning toward recession. The only difference is the rate of growth. Maybe this year it's 2.5%, and next year it might drop to 2.4%, but it's still growth. So overall, looking at it, there aren't any major problems with the global economy this year. All the big investment banks and international organizations like the World Bank and the IMF today are telling everyone that there's basically no issue with global GDP this year. All right, but even though there are no problems, we still need to remember, like we always say on the show, you have to maintain a sense of caution, even when things look good. Just because the economy's fine and there are no obvious problems doesn't mean you can just close your eyes and buy anything or do whatever you want. No, you still need to carefully select which individual stocks to invest in. Some stocks may have already gone up a lot, so you might want to wait for a pullback before getting in. And there are some stocks that might still be at a low point maybe, and could have potential. There could be a wild rebound or even a catch-up rally effect. So you really need to figure out exactly where each stock stands in terms of its position. So even though the economy is fine and global GDP is still looking good, every company, every stock, and even the indices in different regions have their highs and lows. Some of them will continue to be driven upward by strong bullish momentum. Some, on the other hand, might see their upward trend come to a sudden halt. That's why every day, of course, we'll keep analyzing and tracking these for everyone in the group, or in the simulated class sessions, breaking things down and following up one by one. So make sure you stay tuned to the program for all the updates and information we track for you. Just to let everyone know, as far as fundamentals go, globally this year, there really aren't any major issues. But some of you might be worried about something else, namely Powell. Powell, sometimes just says something offhand and it puts everyone to sleep, right? That's how it is these days. And then there's Trump, who's always stirring things up. Let me briefly explain what exactly he's been up to. Whenever he stirs the pot, the US futures and stock markets start to fluctuate wildly. That's the annoying part. He just can't seem to stay out of trouble. He just does all sorts of weird things. And today, I have to mention this. Federal Reserve Chairman Powell will be attending the Supreme Court hearing tomorrow, January 21st, regarding the dismissal of Kukris. Well, let him attend. Let him listen to the arguments. Let him go debate. Fine. That's what he wants to do. That's what he wants. He wants to protect his guy, his appointee, which is Kukris. As we know, back in September and October last year, Trump kept trying to get rid of Kukris, right? He claimed Kukris was suspected of mortgage fraud and falsifying accounts, and kept trying to replace him, but so far, it looks like he can't be replaced. All right, so regardless of how the Supreme Court rules on January 21st, or what happens at that hearing, the point is, this year, Trump is definitely going to get his hands into the Federal Reserve. Whether it's appointing new board members, a new Fed chair, or new committee members, it's all going to happen. So I think whether or not Cook ends up being replaced, this year is going to be full of turmoil and drama. It won't be over. It really won't be over. And as for last week, did everyone see that news? Or maybe it was on Monday. I'm not sure. Honestly, I don't think it's really bad news. To be honest, it's not really negative news. What it said was, this was Trump talking. In that interview, Trump said that his current economic advisor, Hassett, who is actually the top contender for the current Federal Reserve chair, the most prominent dove, his name is Hassett, he is also currently the economic advisor. Trump said that he really wants to keep Hassett in his original position because he believes Hassett is a strong spokesperson or representative for the government in promoting the economy. So he really wants to keep him by his side, continuing in his role as economic advisor. At this point, the market needs to interpret this. So if Hassett doesn't end up becoming the new Federal Reserve chair this year, then whether it's the former board member Quarles or the current board member Waller who takes the position. These two people don't seem to be as dovish as Hassett, so will the entire international stock market and the US stock market suddenly come to a halt and end the rally? Does it mean the Federal Reserve won't cut interest rates? Actually, that's not necessarily the case. You need to have a clear idea in your mind. Whether it's Hassett, or Waller, or even Walsh, any of these officials who are going to be appointed, just know this. Whoever gets appointed as chair will definitely follow Trump's orders. So the only differences between dovish and extremely dovish. Let me say it again. With a new chair being appointed, in the end, the only difference will be whether they're dovish or extremely dovish. Okay, there's no such thing as this so-called full independence of the Fed. Not listening to Trump, no matter what Trump says or how he criticizes, it's unlikely that the new chair will stand firm like Powell did. Whether Hassett becomes a new chair or not, that's another matter. Whether it's Hassett or if they switch to Waller, overall, I think this year the Fed's operations are still leaning toward a dovish rate-cutting direction. Right now, they're actively moving in that direction. So as for independence, just set that aside for now. During Trump's time in office, I think it's very hard for the Fed to maintain complete independence. It's difficult to avoid being influenced, honestly. So just take this news in stride. I believe the direction toward rate cuts this year hasn't changed. So even though there's some short-term disturbances in the market, people are worried about things like the tariff war, or suddenly the Kiribati incident, or talk about creating a new United Nations. Anyway, there's just been a lot going on. Trump has stirred up a lot of things. People are worried that if these tariffs keep going, inflation will rise again. And if inflation goes up, the Fed might not want to cut rates anymore. So have we seen anything in the 10-year Treasury yield? It spiked to 4.27%, and the medium-term rate went up to 3.16%. But it's not too bad. It's just a slight increase. As for the number of rate cuts, it's dropped from about 2.34 last week to 1.9 times now. But overall, it's still close to 2 cuts. Let me give everyone a heads up. We think these 2 cuts will probably happen in the first half of this year, maybe in March or June. Then, in the second half of the year, there might be room for another rate cut, possibly in October or November, right before the election. So no matter what, we'll keep tracking economic data, inflation trends, and changes in the job market to predict how the Fed's rate cuts might change and how many times they might happen. All right, the US dollar index is still relatively weak, dropping by 0.61% and continuing to fluctuate below both the 50-day and 200-day moving averages. Overall, it's still in a weak, choppy pattern. Just something for everyone to be aware of. Now, moving on to the next point. Now, regarding geopolitical risks, let's talk about Greenland. As we mentioned a couple of weeks ago, there's this sense of rivalry and hostility, right? It's like stirring up a pot of trouble. Poor Greenland. All the major powers seem to want a piece of the pie, mainly because of its strategic geographic location and its extremely rich reserves of rare earth minerals. Especially, its strategic position can be used to counterbalance others. China and Russia have hypersonic missiles, which serve as an early warning system. Of course, the US really wants to bring Greenland under its control. We know that just last week, around January 16th, Trump said, yes, Trump, always fighting against Obama. When I say Oba Oba, it's not the Korean Oppa, meaning a handsome older brother. Instead, Trump's Oba Oba refers to 8 European countries, or Oba for short. So which 8 countries are they? These 8 countries, these 8 Oba countries, were singled out by Trump. He said, if any of you 8 countries don't agree to sell Greenland to the United States, then I'm going to impose tariffs on you. So which 8 countries are we talking about? Let's go through them one by one. First of all, Greenland is an autonomous territory, right? It's called an autonomous region, but in reality, Denmark controls its defense and foreign affairs. So even though it's called an autonomous region, it's closely tied to Denmark. So the first countries he mentioned are Denmark and Sweden. That includes the UK, France, Germany, and others. He said, if Greenland's sale isn't supported, then starting February 1st, I'll impose a 10% tariff, and by June 1st, it will rise to 25%. All right, then there were also rumors that they might try to lease Greenland, maybe for 99 years. That really feels like going back to, I don't know, maybe 118 years ago or something. Wasn't it back then? I can't remember if it was Hong Kong or Macau that was ceded to another country, to the UK. Wasn't the lease term also something like 99 years? Or was it 100 years? I forget. It was a really long time ago. I don't even remember exactly when that was. Whether it was the Sino-Japanese War or the Treaty of Shimonoseki, back during the Qing Dynasty, ceding land for 99 years was the norm. They gave up Hong Kong, Macau, and Taiwan, which Japan then colonized for decades. That was all a long time ago, but this new 99-year lease proposal really brings those memories back. Actually, I think this leasing approach using leases and such is probably workable. It's definitely better than the US sending troops abroad or starting some kind of tariff war to counterbalance those 8 countries. So in my opinion, Trump is basically taking advantage of those European countries, the 8 European countries. Right now, it seems to me, first of all, there won't be a war. It's not like they'd go to war with other NATO countries or any of those countries over this. That's basically almost impossible. I'd say it's pretty much 100% certain. It's almost 99.9% impossible that things would accidentally escalate into a conflict. Now, as for tariffs, will they really impose a 10% tariff on February 1st next year, or even raise it to 25% on June 1st? I think tariffs are just one of Trump's tactics, a way to intimidate, and also a tool. Will they impose tariffs? Maybe they will, but how long will they last? I don't think it'll be for very long, just like last year's trade war. They'll impose tariffs for a bit, and as soon as other countries back down, what happens? They'll compromise. Or if the tariffs are imposed, Europe will say, if you keep this up with me, now that UK and France are already complaining, and Macron from France even said directly, if you want to impose tariffs, go ahead. But once you do, I'll start working with the EU to draft countermeasures, like imposing tariffs on nearly 93 billion euros worth of American goods. So I think if these tariffs go through, in the end, it's just going to be a lose-lose situation for both sides. Will the US really go so far as to impose a 25% tariff on us just because of Greenland? I think the chances are pretty slim, especially since it's an election year. If they keep pushing this and prices go up, and if the EU really retaliates by slapping tariffs on 93 billion euros worth of American goods, then that's it. He won't even need to run for re-election this year. Seriously, it would be over for him this year. The whole thing would just be handed over to the Democrats. There'd be no need for an election. So I believe that in this situation, the US is more likely using threats as a way to seek some kind of under-the-table deal. So in the end, it's probably just that the US will continue to stay in Greenland. This is more about establishing more missile or defense bases, or maybe proposing a long-term lease, like a 99 or even 100-year lease, to rent Greenland. As long as Denmark agrees, there's really nothing stopping it from a European perspective. If you agree, I'll just lease it from you, but it won't involve going to war. As for tariffs, I think they're just for show. They're a tool, a means to an end. Now, if Trump really wanted to be emperor, set up a peace committee. This peace committee, in my opinion, is just another farce. He says he wants to create a merger committee, but what is this committee actually for? It's supposed to oversee the reconstruction work in the Gaza Strip and so on. Because right now, Israel and Hamas have supposedly agreed to a ceasefire. But the ceasefire is on and off, and things are a mess. So he's saying this peace committee is meant to supervise the reconstruction in Gaza. I think that's just a nice-sounding excuse. The stated purpose is reconstruction, but in reality, what he really wants is, basically, Huangpu wants to be the emperor. He wants to unify a new United Nations. Why? Because Trump really doesn't like the current United Nations. He thinks the current UN doesn't follow his orders, so he feels it should be replaced. So the main point is this peace committee, right? As long as you join as a member, each member country has to pay $1 billion US. That's a huge amount, 31 billion new Taiwan dollars, to become a permanent member. Taiwan might actually want to join, because Taiwan, Taiwan can't join many international organizations, so maybe Taiwan would be willing to spend $1 billion to join this peace committee. But after joining, they might realize there are only 5 members inside. Not that many, not like the United Nations. He said that in this membership, besides each country paying $1 billion, the final decision-making power might end up being given to, well, just Trump. Trump alone would have the final say, because right now, in the United Nations, Trump doesn't have the final say, which is why he really doesn't like it. So this peace committee is basically hoping that in the future, Trump will have the final say. Amber, good evening. Also, he mentioned that he sent out these invitations to about 60 countries. But among these 60 countries, including Russia, some have already declined. Right now, the UK and France have already said no. It's pretty interesting. Out of the 60 countries you sent invitations to, the UK and France, 2 major countries, directly told you we're not joining. Also, he said, well, supposedly, the official reason is to help with the reconstruction of Gaza after the Israel-Hamas conflict, right? But in the end, even Israel itself said no. He thinks this peace committee doesn't meet some of his country's laws or requirements, so he also refused. What's interesting is he set up a peace committee, wanting to mediate, to be responsible for overseeing the ceasefire and the reconstruction of Gaza, but the real main players, Israel and Hamas, Israel actually said no. So for now, they don't want it. That's why I think it's actually hard for the situation to get any messier. Even though Trump said didn't France and the UK say no? He said if France refuses, he'll slap a 200% tariff on wine and champagne. Well, go ahead and try it. Just go ahead and do it and see if Americans end up with no wine to drink. Tough as it is, France could slap a 200% tariff on American products. But if this continues, it'll never end. Why not? Last April, the US tariffed China, and both vowed to go all the way. One cited 125%, the other 157%. How high can you go? Both claimed they would raise tariffs over 100%. But did either actually reach 100? No, because everyone knows doing so is unsustainable, whether for eggs, electronics, or chips. If a chip originally sells for $10 and you slap a 100% tariff on it so it becomes $20, do you think the US can handle that? Apple in the US would be the first to start complaining. A lot of high-end chips in the US are imported from abroad, from Taiwan, from Japan, from South Korea. If a chip that costs $10 suddenly doubles to $20, do you think Apple can handle that or not? Because the price has doubled. So let me ask, what about the iPhone? How much are you going to sell each phone for? If it was originally $1,000, are you going to sell it for $2,000 now? That's impossible. So this whole thing is just people making noise on the surface. I can shout 200%, I can shout 2,000%, whatever. But will it actually happen? I don't think so. That's why I think Trump's so-called peace committee is just something to watch for entertainment. I really don't think the whole committee will come together. You expect 60 countries to all listen to Trump? Mission impossible. So the United Nations still has its checks and balances. It's just that. Trump really is crazy about wanting to be emperor, although in some policies or in the way he handles certain international affairs, he really does have a lot of drive. Yes, Trump is indeed very forceful when it comes to mediating certain conflicts or implementing some economic measures. There's no doubt about that. But sometimes he is just... Every time he has to make his presence felt, and sometimes he stirs things up, causing a bit of chaos for everyone. That's just his personality. So I think in the next 3 years, he still has 3 years left in the remainder of his term. This will likely continue, so be prepared. His comments cause market fluctuations, so manage your positions carefully. New York crude rose 0.24% today, with little impact. Last week's Iran incident spiked prices. Hey Jeffrey, good evening. Long time no see. Trump has many tricks. All right, as for crude oil prices, last week they spiked up to $62, but that was mainly because of the Iran situation. There were rumors that the US was going to attack Iran, and then Iran said they weren't going to execute the protesters. After that, Trump said, okay, since there are no executions, I'll just wait and see for now. No plans to send troops. Let's just watch how things unfold. So at the moment, I think crude oil prices are still relatively weak overall. Occasionally, some geopolitical risks will give them a little push, and the price will jump up. But that's about it. Any key economic data today or yesterday? Only China's 1- and 5-year LPR rates and Taiwan's export orders. Announced at 4 p.m., Taiwan's orders are strong, with year-on-year growth over 30 to 40%. Performance is solid, and shipments are active. We're actively increasing Taiwan's foreign exchange reserves. Why? Because everyone is worried about the uncertainty surrounding tariffs. So if we can export, we export as much as possible. If we can earn foreign exchange, we earn as much as possible. Basically, before any semiconductor or other tariffs are imposed, we try to export as much as we can. So regarding the export order data, last year the numbers were really strong, with continuous growth. As for tomorrow, we'll be watching related real estate data. And also, Trump is scheduled to speak at 9 o'clock, but who knows what he'll say. Also, the IEA's monthly oil report will be released tomorrow, so keep an eye on that. Then on Thursday, there's the US weekly initial jobless claims, third quarter GDP, and November's data as well. Also, keep an eye on the annualized monthly interest rate, since it's more closely related to inflation. But since it's November's data, it's already a bit outdated. Now it's January, and they're just releasing November's numbers, so its impact will be lower, and the period of influence will be shorter. This is mainly because of the previous US government shutdown, and then they had to catch up on releasing some of the data. So for tomorrow and Thursday's data, just take a look to get a sense of things. But in terms of importance, Thursday's data will be a bit more significant. As for Friday, the Bank of Japan will announce its interest rate decision, which is expected to keep rates unchanged at 0.75%. In addition, the PMI and the University of Michigan Consumer Sentiment Index related to Europe and the US will also be released on Friday. I'll be tracking all of these for everyone at that time. That covers the economic data part. As for next week, this week's earnings reports are actually not too bad. On the 21st, which is tomorrow, we have Netflix and Johnson & Johnson reporting. Pay a bit more attention to Netflix, especially regarding who they were considering merging with before. Mergers and acquisitions. Warner Bros. Discovery or Netflix might discuss using $82.7 billion for acquisitions and other related matters in tomorrow's earnings report. Also on the 23rd, keep an eye on Intel's important earnings report, because Intel is considered a key market indicator. Including companies like Japan's SoftBank, Nvidia, and even the US government. All of them have invested in Intel. So right now, Intel has a lot of backers and deep-pocketed investors. The question is, can Intel become self-sufficient in the US and produce domestically made, especially important chips? Watch Intel's financial report on January 23rd. Next week, more reports follow from the 27th through 31st. Red items indicate key reports like Applied Materials and ASML. 4 of the 7 giants, Tesla, Microsoft, Meta, and Apple, will all be releasing a lot of financial reports next week. So as we move through earnings season and these reports come out one after another, make sure to pay special attention, especially to the important tech stock earnings at the end of January. Whether these earnings reports are good or bad will directly impact whether the January market trend and the bullish momentum in Q1 can continue. If at the end of January, these earnings reports suddenly bring significant negative surprises or fall short of expectations, then it's possible that the momentum driving the market rally may not be able to fully carry through into Q1, making it much more difficult for the trend to continue. So we need to pay close attention to this. The earnings reports at the end of January are something we have to be especially careful about. Now, moving on to the industry side of things, let's take a look at this. There's a research firm called Counterpoint. They pointed out that even though there's a memory chip shortage, which we all know about, right? Companies like Samsung, SK Hynix, and those in the US have all said that HBM memory, high bandwidth memory, has been in short supply, especially with the development of AI. In order to boost HBM production capacity, they've given up on a lot of niche or consumer type products. So for the more standard memory chips like DDR4, DDR5, and so on, they're just not producing those anymore. They're putting all their production capacity and focus into developing HBM3 and HBM4. The world's biggest companies, Micron, SK Hynix, and Samsung, are all working on these. Alright, so after they started focusing on these, since everyone shifted to making them, there's now a shortage of many of the regular consumer memory chips. That's why you can see companies like Nanya Technology, Winbon, and others in Taiwan's stock market, aren't their stock prices soaring, some even multiplying several times? The international price for DDR4 has also shot up, even higher than DDR5. This situation is really bizarre, and the prices are still climbing. As long as the international prices don't come down, as long as those international prices stay up, all the DRAM-related stocks will just keep going up. You know what this feels like? It's kind of like a double DDR4 and double DDR5. One is more standard, the other is more high-end. Double DDR4 is more common, while double DDR5 is even more advanced. You can imagine, right now, a lot of companies, let's say, to put it simply, a lot of companies invest their money in developing things like cars, motorcycles, and other vehicles, so they don't use their extra production capacity to make bicycles anymore. But does that mean there's no demand for bicycles? No, there's still a lot of people who like riding bicycles. So what happens is that there are a lot of motorcycles and cars, and everyone is putting their production capacity into those. But because bicycles don't share those related parts, and there isn't enough production capacity dedicated to making them, even lower end bicycles have ended up costing more than a motorcycle. That's the situation with these companies now. For example, a brand new motorcycle might cost around 100,000 yuan, right? These days, the motorcycles young people ride are really expensive. Back when we used to ride motorcycles, it was different. Back then, 50 or 70cc bikes cost 28,000, while a 125 was 40 to 50,000, which was expensive then. A $50,000 bike was a big deal for a salesman, but now younger colleagues spend 100,000 NT on a motorcycle. Think about it. 100,000 NT for a motorcycle is strange. It's just two wheels and a handlebar. The LCD dashboard looks sharp, but the bike still costs 100,000. I don't get why it's so expensive. So I'd rather buy a $50,000 125cc bike. Anyway, even a regular bicycle these days? A single bicycle actually costs more than 100,000. It can go up to 200,000. That's the feeling, because no one is making bicycles, so a bicycle ends up costing 200,000, even more expensive than a motorcycle or a car. That's exactly what's happening in the memory market right now. DDR4 is much more expensive than DDR5. It's just a shortage, that's all. That's the situation. But according to the research firm Counterpoint, even though there's a memory shortage, in the fourth quarter, Apple's iPhone 17 and iPhone still sold extremely well. Year-over-year shipments grew significantly, nearly 30%, and Apple regained its position as the top smartphone brand in China. However, they pointed out that both Huawei and Xiaomi smartphones experienced double-digit declines, and overall demand for smartphones in China also dropped by 1.6% year-over-year in the fourth quarter. They specifically highlighted one interesting point, which is that right now, the memory chip shortage wave still hasn't been resolved. It's still ongoing. Overall, looking at the first quarter, memory prices may continue to rise, possibly increasing by 40% to 50%. That's not 4 to 5%, but 40 to 50%. So everyone needs to keep this in mind. This is like the price of a bicycle. It's even more expensive than a scooter. Of course, this is a market distortion. This is not normal at all. This is definitely not the norm. And sooner or later, there will be a correction. Sooner or later, there will be a correction, because a bicycle can never be more expensive than a scooter. This is just, well, what we'd call a very irrational market situation. But before the situation is corrected, it will continue for a while. And since the situation can't be resolved in the short term, it causes the cost of products like cell phones and consumer batteries to go up. So yes, the costs are rising. Just think about it. For example, the iPhone, even though it reclaimed the top spot in the smartphone market in the fourth quarter. But because memory prices are still rising in the first quarter and even into the second quarter this year, as long as these price increases don't stop, the cost for making phones and computers will keep getting pushed up. Why raise the gross margin? Gross margin and net profit margin will decline. So this is a pretty significant drain, a pretty big drain. So for Apple, it's the same. The cost pressure is there. In addition, Apple is still lagging behind other major international companies in AI development. So that's something to watch out for. Even though last week Apple announced a partnership, who was it with? They partnered with Google. But as for how effective this collaboration will be, we haven't seen any results yet. We haven't seen anything yet. So because of these factors, you can see that Apple's stock price fell by 1.04% last Friday. This upward trend line has already been broken. The blue line here has been broken. Originally, I thought it would hold at the 50-day moving average, but it only managed to hold for about 5 days. It broke through. Unfortunately, it broke through. Once it broke, you'll notice there's basically not much support below. There's really not much support underneath. And not only is it sliding down, but all its monthly and quarterly moving averages have turned into resistance, all curving downward. In other words, we can only say that in the long term, Apple's fundamentals and financials are still solid and excellent. It's just that technically, plus what I just mentioned, the development of AI is relatively unfavorable. In addition, considerations like cost and machine upgrades may cause Apple's revenue, profits, and gross margin to experience larger fluctuations. Under these circumstances, you can see that the technical indicators are also leaning more bearish, with a short-term bearish outlook. So for Apple, just pay a bit more attention. Before this short-term downward correction and volatility is over, you should just continue to wait and see. In the short term, it's relatively weak. In the long run, after some consolidation, there might still be a chance for it to move higher. But for now, Apple as a tech giant is looking pretty weak in the short term. So just pay a bit more attention. Even though CarPoint says that Apple has regained the top spot in market share in China and made a comeback in the fourth quarter. But at the moment, the technicals and the market sentiment might not be favorable for Apple's performance. So to circle back and echo what we discussed earlier, why did we say at the beginning that the fundamentals, like global GDP and the overall fundamentals, aren't the problem right now? The issue lies in the technicals and market sentiment, which require a correction after a strong rally. If you don't have a correction, then it's not a normal market. You need a slight pullback to allow more people to get on board. Or you could say it's about correcting the issue of stocks being overvalued and so on. So we're just giving you an update on Apple's situation today, especially regarding the technical side. Just keep an eye on it for now. Now, moving on to OpenAI. All right, as for OpenAI, of course, Microsoft has made a huge investment. They're basically the biggest shareholder. OpenAI's head of global affairs said that in the second half of this year, they might release their first hardware device. They haven't revealed any details about this device, but there are already rumors circulating in the market. It might be a product similar to AirPods, those Apple earphones, something along those lines. And what's the code name? The code name is Sweet Pea. Sweet Pea, like the little sweet peas. You can imagine they chose this name because the device is small, like a tiny pea, or a little sweet bean, something petite like that. If you make it Sweet Pea, sometimes it can even be something between couples. Sometimes people use it as a nickname for each other, like little baby, little sweet bean, those kinds of pet names, So with Sweet Pea, you can imagine that maybe this thing is small, lightweight, and something that's really convenient for everyday life, a kind of handy gadget. Of course, OpenAI hasn't said anything specific, so we'll just have to wait and see. They said it's expected to be produced in the second half of this year, maybe in September. That's just my guess though. I'm just guessing, but if they're really looking to create a product to replace something like AirPods, it might also be some kind of earbud. And maybe these earbuds, when you put them on, will have some AI detection features and AI conversation capabilities. The simplest function could be, say, when I travel abroad and need someone to translate for me, or need to talk to foreigners, I can speak Chinese. And even if the other person speaks English, I can still understand what they're saying. Something like that. As a basic feature, I think it would have. Or let's say I see something, or I see some kind of image or product. Maybe the AI earbuds could tell me what it is. What is it? Actually, this kind of technology already exists. Many smartphones already have it. So I guess OpenAI might also combine what we call everyday products with AI features, merging them together. As for what exactly will come out of this combination, nobody knows for sure right now. People are just speculating. Maybe it'll be something similar to AirPods or something along those lines. Anyway, let's just wait and see. Speaking of OpenAI, of course we can't forget its major shareholder, Microsoft. Microsoft is the same. Even though Microsoft has done well in AI development, CSP, and cloud computing, it still faces issues. It's not that its fundamentals are bad, not at all. The problem is also technical, specifically with its stock price. Technically, what's happening now is that it's facing overhead resistance. Monthly and quarterly moving averages show a bearish alignment. With the 200-day average broken, Microsoft's early July performance is weak. Fundamentally, there's no issue, and AI development is strong. This is simply a technical correction. Unless there's a problem with AI development. What I mean by a problem with AI development is, for example, if OpenAI runs into cash flow issues, or if its revenue, say they tell you they'll make $20 billion this year and $40 billion next year, but then it turns out they can't deliver. They keep burning through cash. And even though they keep partnering with NVIDIA, Oracle, and others, there's still no strong positive cash flow to quickly turn losses into profits. If this goes on for a long time, investors might not be willing to keep funding it. Over time, investors will actually start to have doubts. Like, is this really what it claims to be? It's just like with Oracle. Will the funds become inflexible? Will it turn into a situation where you keep accumulating negative assets, making it really hard to make a profit in the future? So that's the concern the market has about it being overvalued. And of course, this also ties into the potential impact on its major shareholders, like Microsoft and other parent companies. Investor confidence is key. Microsoft stock dropped below its 200-week average, showing weak short-term performance. Apple is similar. It's consolidating. While the market hits new highs, Apple just fluctuates and slowly declines, which is troublesome. Irene, that's right, exactly. It's like translation tools. I think those are pretty basic things that should exist. Okay, so this so-called G6H, something that's supposedly better than OpenAI, right? There are a lot of things like that. For example, Gemini. Gemini 3, I've heard it's pretty good, though I haven't had time to try it yet. And this Google Gemini, I've heard people say it's even easier to use than OpenAI. If you get the chance, you can give it a try. Now, this is also a little bit related to Tesla's products. In the European market, as we know, last year Tesla's fourth quarter revenue and shipments weren't good. They actually declined year over year. And honestly, it wasn't just the fourth quarter. Their performance in the third quarter last year wasn't great either. Why is that? The third quarter might have been a bit better. The reason the third quarter was good is because Tesla's shipments were really high then. They surged. That's because before the end of September last year, the $7,500 subsidy in the US was set to expire at the end of September. So in the third quarter, shipments spiked and revenue looked pretty good. But after that subsidy ended in the fourth quarter, things started to decline. And then as for the European market, the performance there was really poor. That's mainly because of Musk's comments, which turned off a lot of people in Europe. He made some populist remarks before, like saying "Make America Great Again," and criticizing certain things about Europe, which really rubbed a lot of people the wrong way. But today, Germany's Ministry of the Environment announced a small piece of good news. This good news might maybe give Tesla a little bit of a boost in the European market. Just a little, I'd say. It's better than nothing. So what the German Ministry of the Environment said is that the electric vehicle subsidy, which originally ended in 2023, is no longer available. There were no subsidies in 2023. But now, starting from January 1st of this year, as long as it's a newly registered electric vehicle in Germany, there will be subsidies based on factors like the type of vehicle and the number of people in the household. The subsidy amount ranges from about 1,500 to 6,000 euros, which is quite a bit. 1,500 to 6,000 euros. The total subsidy budget is 3.1 billion euros over 3 years, and up to 800,000 vehicles can be subsidized. Although the goal is to speed up the adoption of electric vehicles, this might provide a small incentive for EVs. There is an incentive, but I can only say that we should keep watching, because after all, it's just Germany, only Germany as a country, offering the subsidy. If it expands to the point where all of Europe is subsidizing electric vehicles, then it could help some brands, like German and other European cars, like Mercedes, BMW, Ferrari, and so on. It would definitely be beneficial for all of them, including Tesla. So just keep this news in mind. I think it is helpful, but the extent of that help still needs to be observed further. As for Tesla's stock price, it dipped slightly by a 0.24% last week, but it's the same story. The recent performance of the Magnificent Seven has been a bit sluggish. Lately, the Magnificent Seven have mostly been taking a breather after big gains, pulling back to rest. This pause doesn't mean they're turning bearish or that the fundamentals are bad. It's not like that at all. This is just a normal adjustment. Basically, it is a correction based on fundamentals, technicals, and market sentiment. After a big run-up and hitting new highs, a pullback and consolidation is natural. As for Tesla, this blue neckline here, unfortunately, it still hasn't managed to break above it. Right now, Tesla still hasn't gotten above this blue neckline. As for the monthly moving average, just like the other Magnificent Seven stocks, it's also starting to curve downward. So in the short term, there's going to be more pressure on the stock price. Everyone should be a bit alert to this situation. Just be a little cautious and on your toes. Oh, for Tesla, you can see that Microsoft and Apple, these three stocks, all their moving averages are showing a relatively weak and sluggish trend. As for the other four, Amazon is doing a bit better, but Meta is also very weak. Meta, like Microsoft, is dropping the fastest, with all the moving averages pressing down on it. Nvidia, on the other hand, looks more like it's consolidating at eye level, fluctuating at the top, because Nvidia's fundamentals are still very strong. TSMC is exceptionally strong, potentially even surpassing the Magnificent Seven. Google follows as the next strongest big tech. Their sales are solid, and their TPUs perform great, making them a leader in AI development. Both companies are doing quite well. Among the Magnificent Seven, Google is the strongest. TSMC is also very strong. In memory, Micron and SanDisk thrive due to the chip shortage. In the short term, these three stocks are the strongest. As for the other six giants, they're mostly fluctuating or trending weaker, so you need to pay a bit of attention to that. Now, looking at companies outside the stock market, pre-market movers, let's take a quick look at Newmont. This company specializes in gold mining, digging for gold. It's apparently the largest in the world. In the US, Newmont's pre-market price went up by 3.4%. Why? Because gold hit a new high again. Gold is really strong. I checked and it's almost $4,700, right? That's really strong. So mining companies like Newmont went up by 3.4%. Other companies like EQT and Expand Energy are also up by 2% to 3% in pre-market trading. Kata Energy is up 1.9%. Netflix is up slightly by 0.68% pre-market, and they're releasing their earnings report tomorrow. We'll take a look at that together then. As for companies that are down, there's a whole bunch, a lot of them really. Today, US stock futures are pressured. The opening will be tough. As the market drops, seek opportunities in quality companies being hit hard. Plenty exist. Currently, the US market is simply facing more pressure than usual. The one under the most pressure, dropping nearly 10%, is APP. Why did this company get into trouble? Why did it fall 10%? Because there's a short selling firm in the market called Capital Watch, and they accused APP of being involved in money laundering. What kind of money laundering? The money from scam groups. This is a big deal, a really, really big deal. Everyone probably knows about that scam group in Cambodia a while back, right? Wasn't there one in China, in Fujian? Wasn't it that Prince Group, Chen Zi? Chen Zi from Prince Group got arrested, didn't he? The money laundering by Prince Group was massive. Their Bitcoin, which was seized by the US authorities, amounted to as much as $15 billion USD. That's almost 500 billion new Taiwan dollars, an enormous amount of money, and it was all from scams, all of it. Prince Group was entirely about scamming. In Phnom Penh, Cambodia, there are a lot of these operations. This labor group said that the app company was valued very highly at 4 trillion new Taiwan dollars. This company, AB, is suspected of helping Prince Group with money laundering. That's a huge deal. If after investigation it's confirmed that this really happened, this company could be delisted. It could be forcibly delisted, and its stock could go to zero and become worthless. So this is a very, very serious accusation. So what's really going on? Right now, we still don't know. It's just that this short-selling firm, Den Capital, directly claimed that this company is suspected of helping Prince Group with money laundering. How did they launder the money? You know, I was wondering how they even found out. Here's what they said. As for Prince Group, after they got the money from the scam operation, right? How do they launder the money? After all, it's all dirty money. How do you clean it? If you make a ton of money from scams, billions of NT dollars, how do you make it look legitimate? What they do is set up an advertising company. And this advertising company, right, they claim to spend money on advertising and marketing fees. Where do they spend it? On this company called APP. And what does APP do? They specialize in marketing, mobile payments, mobile devices, that kind of thing. This marketing company, you know? They go over there and buy ads. They just take the advertising budget and hand it over to APP, right? And there are a lot of ads, so a lot of money is involved, billions even. So what does APP do after getting this money? Well, they might just turn around and transfer that money back to the Changji Group or to the Taizi Group. They set up another so-called marketing company or a shell company, and the money gets funneled back again. In other words, to put it simply, Company A buys ads from App. Then what does App do with the ad money? They might give some kind of rebate or take a commission and then transfer the money back to Company B. So after making a round trip like this, the money comes back clean. And what's more, the major shareholder of App is actually a Chinese national, though I don't know his name. Wang Jie just asked, what's his name? Tong something? Tong Hao or Tong something? He said that this major shareholder is even involved in running gambling businesses, gaming operations and all that, which are used specifically for money laundering. A lot of these gaming businesses are set up just for laundering money. Like, you take your money to a casino and exchange it for chips, right? You might exchange hundreds of millions or tens of millions for chips. You take the chips and play at the casino, and when you're ready to leave, when you want to go home, don't you have to exchange those chips back into cash? Right? So what happens when you exchange them? When you turn them back into cash, the money comes out clean. That's how dirty money gets laundered through casinos. First, you convert it into chips, then you turn it back into cash, and then you take it out. That's called money laundering. So he said that the major shareholder of this app's company is involved in this kind of thing. And then this organization is accusing the app of being involved in money laundering. This is a really serious issue. So before the US stock market opened, the stock price dropped by 9%. In addition, companies like Western Digital, even Bitcoin-related Coinbase, Teradyne, Robinhood, Seagate Technology, and others, all of them saw their stock prices fall in pre-market trading. They all dropped by about 4% to 5%, and some even more than computer companies like HPE. Even Tesla and Nvidia both took a big hit, dropping by 2 to 3%. So today, the US stock market is under a lot of pressure, so you need to pay a bit more attention, especially with this app issue. If it drops significantly, it could trigger a lot of chain reactions. So everyone, just be a little cautious. Keep an eye on the US stock market today. You might want to be a bit more careful. And what about the Dow Jones Index? Looking at last Friday, the monthly moving average was still holding up. So today, we need to watch whether during this pullback, the Dow can stay above the monthly average. If it can still hold, then the overall bullish structure hasn't been broken, especially for the Dow Jones Index, since it's considered a key performance indicator for Trump. So today, just keep an eye on the monthly moving average. Make sure it doesn't break below that. As for the Philadelphia Semiconductor Index, we've talked about the rising wedge pattern. Ideally, we don't want to see a rising wedge form. In the past couple of days, things have been pretty good. It broke through the resistance of the rising wedge. This blue curve here has been broken through, and there was a chance to reverse the entire rising wedge pattern and avoid its formation. But if today, for example, those tech stocks we just mentioned, like Micron, SanDisk, or some other semiconductor companies, if they go down, then the Philadelphia Semiconductor Index might pull back to retest the previous resistance area of that rising wedge. If it pulls back and holds without falling further, then there's nothing to worry about. But if it falls back and even breaks below the lower support line of the rising wedge, then the entire wedge pattern will be formed. In that case, the pullback pressure on the whole semiconductor index will intensify, so you really need to pay close attention. So as long as the pattern hasn't changed yet, there's no need to get too anxious, but if there is a change, we'll let everyone know right away. So for today, just pay a bit of attention to whether this blue trendline support can hold. That's enough. As for the Russell, among the major indices, it's relatively weaker. The Russell doesn't have any rising wedge pattern or anything as strong as the Dow. Not at all. Basically, with this quarterly moving average, it already slightly broke below it last week. Just a slight break. In the short term, it's more likely to be taking a breather. If today the pullback pressure increases again, and if, like I just mentioned, Apple is also dropping today, Microsoft is dropping, and if Tesla can't hold up either, plus companies like Meta and so on, you can't expect the Magnificent Seven to be left with only Google standing out, or just Amazon being strong. Those two are relatively strong, but they can't hold up the whole market on their own. So for the Russell, if the remaining 4 or 5 major stocks are still weak, then today it's possible that this quarterly moving average will be broken more decisively. After that, the consolidation period will be extended. With a longer consolidation period, what does that mean for the January effect? Well, we can only say that the market is just taking an early break. The first 20 days saw pretty good gains, so taking a break early doesn't mean it's turning bearish. So that's all I can say. In the short term, it hasn't turned into a bear market, but this short-term pullback and choppy consolidation after a strong rally is something everyone needs to be especially careful about. So regarding this, I also gave you some key points about the regional banks and the Philadelphia Semiconductor Index at the end. That's all the information I have for you before the US stock market opens. Once again, I want to remind everyone to manage your positions carefully. Position management is really important, especially since the US stock market might face more pressure today. Of course, if you have any investment questions, feel free to leave me a comment. After class, remember to like, subscribe, and share. Finally, I wish you all successful trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.